The central bank just made a surprising decision and the stock market is at a critical level. Is it going to hold or will it break? Because this morning we look at the economic calendar, we have no major economic news to contend with. We look at the fear and greed index, we are sitting at 24. We're still in fear territory. Where the bulls come back today and continue to push stocks higher. We start off this morning looking at the dollar index. Right now in pre-market, it's down a whopping 1.5 cents on the session. And not a whole lot of movement, but keep in mind with the dollar index, we still have this breakdown point, this structure breakdown point. We're looking for the dollar to come back and retest. Now, normally a stronger dollar is weaker for the market, or it makes it harder for the market to go up. Then we come over this morning, we take a look at the volatility index. We can see the VIX right now in pre-market is currently down about 14 cents on the session, which really isn't that expected. If you notice, we had one heck of a volatility spike out here on Monday. So from Monday to where we currently are, the VIX has come down substantially. We jump over and take a look at gold this morning. What is gold doing? Gold's on the rise, slightly up 2.3 points. And it's going to be critical for gold because when we zoom this chart out here just a bit, this swing point must hold in order for gold to go ahead and make a push back up towards all-time highs, trying to run all the way up here for our target at about 2586.2. Now, if we start flushing these lows, watch out, watch for the swing point right over here to come back and get tested. If that breaks, watch for the middle of the minus development area, about 2320 to get tested. Anything below that, we'd be looking at 2257. Now, when we take a look at Mexico's central bank cuts interest rates despite rising inflation, and we got to ask ourselves this question. Jay Powell kept saying they're committed to their 2% inflation goal. We're already starting to see banks say, maybe not. Maybe we need to go ahead and cut rates. And we can see right here, analysts expressed shock Thursday at a decision by Mexico's central bank to cut interest rates. The same day, official figures showed a sharp rise in domestic inflation. No, do not think that could not be coming to a central bank near you. The Fed is already backed against the wall. And at some point, the Fed's going to give up its fight on inflation. And they're going to say, you know what, we're just not simply going to hit the 2% inflation target. Now, let me know if you guys agree with that. Do you think Jay Powell is going to hold off on cutting interest rates until inflation's at 2%? Or do you think it's already baked into the cake? We come over this morning, we take a look at the Dow Jones. What do we see? Dow Jones right now in pre-market up a whopping 17 cents. And we got to be very careful. Yesterday, I shared with you guys the Fibonacci retracement level, and we're right near the 38% level. This is an area sometimes where if we're going to come down for a double bottom, this is a very likely area where that retracement really starts to form right around. Then we looked this morning at the Russell 2000 in pre-market. The Russell's up 42 cents on the session. The Russell was unable to fill the gap right up here at 208.90. Will it have enough juice to push up there this morning? Then we jump over and we look at the QQQs, and in the pre-market, the Qs are up a whopping 14 cents on the session. Now, as we look at this, keep in mind, we do have several gaps to the upside with the QQQs that still need to be filled. The MACD on the daily chart looks like it may be in the early stages of trying to firm up, which we could still see with the MACD firming up a retest of these lows, or maybe we start to come down and then we end up putting in a higher low. On the 4-hour chart, we can see the MACD indicator just started to cross up yesterday. Then on the 1-hour chart, we can see the MACD indicators had about a 45-degree angle on the way up with a good separation of the lines. Now, it's going to be critical. If we cannot push above this recent swing high where we're stuck at right now, that's going to be problematic because now the MACD indicator is near the zero line, and that could be nothing more than a recharge point for another leg lower, or at least a leg back down, taking us near the lows that we saw on Monday. Then out here on the 30-minute chart, notice yesterday's profile shape, looking like a P as in Paul shaped profile. Now, the profile shape doesn't indicate either bullish or bearish in the market. Instead, what it does say is if we break value area low, we're likely going to explore the lower third of the range. And that would be somewhere in the ballpark of 440.22. If we look, value area high is up here at 448.68, where the point of control is 447.72, and value area low is going to be about 444.79. Now notice, right now we're trading right near the point of control. But here's what I'm going to say. As long as we're below value area high, I actually want to be looking for the market to retrace lower. And if we break value area low and we start coming back up, that's when I would change my thesis to say, you know what? I want to look for higher prices. Or if we start breaking value area high, I would also want to look for higher prices. And some of those prices would be, for instance, right up here towards gap resistance at 453.55. and then all the way up here towards the gap being filled at 459.75. I want to make everybody aware Apex 7 a massive 80% sale off all their valuation accounts, passed in as little as 1 day, and you can also get a 150K account for only $40. You get a 250K account for only $40, and you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Now, when we come over and look at the futures markets, notice what we had. All right, we had this little swing high here. We yanked down. We come back up. We overthrew this recent high, and now we're just kind of stuck right around this area. We still have not been able to come back and retest value area low from the prior week or the point of control for that matter. And now the question is, will we start to see a retracement back down towards maybe the minus development area right here in the profile, somewhere in the ballpark of 18,301? We break that, then the target's going to be right around here. Now, keep in mind with the minus development areas, I look for the market to potentially get in that level and then bounce back out. When we're looking at these high volume areas for target locations, I'm just simply using it for a target. I'm not using it to take a trade away from that level. I'm just simply using it for a target location. So keep that in the back of your mind. As we come over and look at the daily profiles, notice what we've done, all right? Last night during Asia, we were able to go ahead and take out the high from yesterday. Then we came down a little bit when London opened. Then we spiked back up, taking out the Asia session high. So now the question is, are we going to come down towards the Asia session low and even down towards the point of control at 18,396.75? That is something I do want to pay attention to. Also, from a daily perspective, notice we've already been above value area high and now we're trading below it, which also indicates we're likely going to see a retracement on the way back down. But I also warned you guys in yesterday's 5 o'clock video, I said, watch out for these minus development areas. We could act like we're going to dive down towards the point of control and then get a rejection out. If you notice where the low was last night, you can see that it came where? Right within that minus development area. So that's really no surprise that the market bounced from that level. Now, the next time we come into that area, it's likely going to break. And that's probably what's going to take us down towards this point of control at 18,396. Now, as we come over and look at the SPY, what do we see? Well, yesterday we had a nice bullish candle. We've had a nice push off the lows. Look at the MACD indicator trying to firm up, but also notice where do we come to? We came right to the edge of this high volume area. Now, one thing to note, this is the area where we could start to see a retracement on the way back down. I'm going to go ahead and clear off some of these Fibonacci levels off the chart, but let's grab a Fibonacci retracement from the swing high all the way down here to the swing low. Notice where we came to, the 38% retracement. This is an area where a lot of times we'll get some type of, a head fake, either a small little pullback on the way down, and then we set up a lower high and we go higher, or this is an area where the market turns and we come back down to challenge the lows, potentially overthrowing the lows from Monday and then going ahead and heading down lower. Then on the 4-hour chart, you can see the MACD indicator just trying to cross back up. And we came right into this high volume area, right on the edge of the minus development area within the profile. Then on the 1-hour chart, you can see the MACD indicator does have a good separation of the two lines at about a 45-degree angle on the way up. But the problem is we're right near the zero line. And if you look left, where we're right at a prior swing point, which is also an area where we could see a little bit of problems in the market, aka a pullback. Now, do we only pull back to this area right over here, essentially filling this gap where we gapped up? Or do we break that area and start coming back up and challenging the lows from Monday? If we only come down to here, then we can start to form some type of short-term consolidation in the markets. We come over and look at the 30-minute chart, and similar to the NASDAQ, we have a P as in Paul shaped profile. Now, what this indicates is if we break value area low, we're likely going to explore the lower third of the range. And I really like down here about 523.75. Keep in mind though, value area low comes in at 527.57. The point of control will be 530.27, and value area high comes in at 531.08. Now, one thing to note, even though I'm going to say if we're below value area high, I want to be looking for sell side trades this morning. Just note where the lines in the sand are. If we break below that value area low and then we start coming back up, I then need to be on the buy side of the market, trying to target the point of control and even value area high. If we don't make it to value area low and the market simply turns and we start getting above value area high, then I want to be on the buy side of the market looking for buy side trades. And one of the targets I would be focused on would be all the way up here at gap resistance at 537.03. Then we'll see if we can run up, completely fill in the gap at 543.03. Now, do I think this gap is likely going to be filled today? The simple answer is no. And that's simply because we have no major economic news to really sway the markets one way or the other this morning. So maybe we grind higher, maybe we grind a little bit lower, but I don't think it's going to be any outsized moves in the market just because we lack major catalysts. Then we come over and we look at the futures markets. What do we see? Well, on the 4-hour chart, we came right back to this prior swing point. Now the question is, are we going to dip back down, or is this the higher low that we were looking for? And now we're going to set up a larger ABC pattern on the way up. If we go ahead and we measure this out, the A to B leg, the B to C leg, that would give us a price completion at about 54.18. Notice we still have not come back and tested last week's value area low, which the rule says that either this week or next week is a very high probability that that target gets hit. If that target does not get hit by next Friday, then it's going to be several weeks more likely than not before we come back and visit that level. So if you're a bull in the market, one thing you want to see is over the next 6 trading days, the market coming back up and testing that area. Now, if we fail right here, this could be a little double top, or this could be signs of a consolidation that is going to start to form. Out here on the 30-minute chart, what do we see? Well, you see last night in Asia where the market, popped up above yesterday's high. We pull back just slightly, right to this minus development area within the profile. Then the market comes up and takes out the Asia session high. So now the question is, are we going to go down and retest the Asia session lows, then potentially go lower, or is that all she wrote? And this is going to be an upper level consolidation as the market waits to break up and out. Now, in last night's video, we talked about the huge minus development area all the way down here, along with some of these other minus development areas. One of the ones we talked about was right in this area. I said, watch out, if we get down into it, we could get a rejection on the way back up. And that's exactly what transpired last night. Now, if we come back down and challenge that low once again, then we're likely going to go ahead and push all the way towards this high volume area at about 5320.25. So this morning, it's going to be critical. Where are the overnight volume profile levels? One, they could give us an early entry into this market. And now as we're looking at the overnight range, we can see that we've only had a 43-point range. I say only because if we put this in the context of over the last 5 days, this is one of the smallest ranges we've seen from the overnight session. It's still quite a large range, but just given the context, look, 43 points back, a couple weeks back, this would look like a huge move. Now 43 points doesn't even look like the market barely moved at all last night. All right, let's come over and take a look at the overnight volume profile levels. You can see before this video is even done, our target was already hit. So if you guys don't think this works, here you go. You see it live and in action. Now, the overnight value area low is going to come in at a price point of 18,494.00. The point of control is going to be up here at 18,569.50, and value area high will come in at 18,607.00. So how do we want to play this? Well, it's very simple. We've already been above value area high from the daily profile, and we're below it. So from a daily perspective, we want to be on the sell side. Then as long as we're below the overnight value area low, I want to continue to look for lower prices. I want to go ahead and see, can I push runners down towards 18,204? If we start getting back above the overnight value area low, then we can target the point of control, aka yesterday's value area high. They're very close next to each other. Then up here towards value area high from the overnight, and then see, can we go ahead and push the overnight highs? Then as we come over and look at the S&P 500, notice what we've done. We came right to our high probability target that we talked about earlier in this video. And you see, we're trying to get a rejection up and out. Now, when we look at the overnight volume profile levels, you can see we are well below value area low at this moment, which comes in at 5340.25. The point of control comes in at 5348.25. Value area high will come in at 5360.75. So what I'm going to say is, as long as we are below value area low from the overnight session, I want to stay looking for sell side trades. If we start getting back above it, then I want to target the point of control from overnight. I want to target the overnight value area high. I want to target the overnight high itself. Then anything beyond that price point, I want to see, can I hold out to see, can we go ahead and make it up towards 54.18, which would complete the ABC pattern that we talked about on the 4-hour chart. Now, if you guys like to find out if Apex is a scam and is Apex still paying out its traders, make sure to watch this video right here.